One expert in structured financing said the simultaneous selling of securities to customers and shorting them because they believe they are going to default is the most cynical use of credit information that I've seen. Do you believe that was a proper legal ethical practice, and would the firm continue to do that practice? Or do you believe that's the kind of practice that undermines confidence in the marketplace?
Well, the short answer is this is the practice of a market maker, and I would like to explain this. But the answer is I do think that the behavior is improper.
Well, I'm just going to be blunt with you. It sounds to me a little bit like selling a car with faulty brakes and then buying an insurance policy on the buyer of those cars. It doesn't seem to me that that's a practice that inspires confidence in the markets. I'm not talking about your own positions. I'm talking about betting against
of an asset
security.
here is an institution, probably professional-only investors dedicated, in most cases, to this business.
Representing pension funds who have the life savings of police officers,
These
teachers.
are the professional investors who want this exposure. Rates got very low for risk premia on the East Coast of the United States. That year after 4 hurricanes, everyone's nervous as such. Rates went up spectacularly. They're lower again. But, is the risk of 4 hurricanes any different any of those times?
Mr. Blankfein, I want to say this, having sat on the board of the California Earthquake Authority, acts of God will exempt. These were acts of men and women.
Thank you very, very much. What an honor and pleasure it is to be here among friends and family today. Lou is right. This is a friendship that has now extended some 40 years. Started when I ran for city council in this town in 1973 with Local 522 by my side, and this is a friendship that will last forever. It's great to be here with Lou and all the board of the firefighters statewide, to be here with Harold and the national firefighters, our friends from Ohio and Wisconsin. It's also a thrill that my daughter Megan, who many of you met on the campaign trail, is here with me today. We're working in business together. She's now my partner. So I want to talk a little bit about what's in front of us. As you can see by the clip that Lou showed you, I developed such a strong working and friendly relationship with Wall Street over the last year and a half. I want to talk to you a little bit about the financial crisis that's still gripping this country, what it's meant to us. I want to talk about the attacks against working men and women that are coursing across this country in the wake of this crisis. And I want to talk about what we need to do together to stand firm and fight for an America where there's equality of opportunity and we honor working people and we rebuild the middle class of this nation. First, let me say that it was my honor to have been appointed chairman of the Financial Crisis Inquiry Commission by Nancy Pelosi and Harry Reid. And as Lou said, we submitted our report to the President and to Congress earlier at the beginning of last year. And that year and a half that I spent in Washington investigating the meltdown that so crippled this country, I must tell you was a revelatory experience. And before I tell you a little bit about what we found and I think what it means, let me just say a couple of personal notes. When I started as chairman of the commission, I thought I knew something about the American finance system. After all, I'd been treasurer of this great state. I'd sat on the pension boards of the 2 largest pension funds, CalSTRS and CalPERS, in the nation. I had been in business for over 2 decades. But let me tell you, I was shocked. I felt like I had walked into my local community bank. I had opened a door I was never supposed to open. And what I saw was a casino floor as big as New York, New York. What I saw was a financial system that had moved away from providing money to build businesses and jobs and wealth for our country to a financial system that had become a casino for the benefit of Wall Street, not our nation. The second personal note I want to make is that as we undertook our investigation, we interviewed over 700 people. We held 19 public hearings across this country. We also heard from hundreds of people, thousands of people, who had played by all the rules, who had worked hard and now saw their lives, their jobs wiped away in this tragedy. They'd seen their hopes broken. And as I concluded our work, I vowed that I would do everything possible in the years ahead to make sure that this country never again face the kind of cataclysm where we were brought to our knees by recklessness on Wall Street and by the big corporate powers who have gripped this country. As we gather here today, talking about what we need to do to fight for workers' rights in this state, to make sure that working men and women have the ability to raise their voices in the democratic process, I think it's important to reflect what's happened to our country. The financial crisis didn't end, as you know, in September of 2008. It's still with us today. 24 million of our fellow Americans are out of work, can't find full-time work, have despaired and given up looking for work. $9 trillion in household wealth was wiped away like a day trade gone bad. And 4 million Americans have already lost their homes to foreclosure, and every credible estimate says that before this tragedy is over, that will rise to about 13 million, up to about 20%, 1 in 5 Americans losing their homes. So what did we find in the course of our report? We looked hard, we delved hard, we looked at millions of pages of documents. As I said, we interviewed people all across this country. We had the power of subpoena, and we used it against Goldman Sachs and other companies. And what we found is, first and foremost, this was an avoidable crisis. There's a line that comes out of Wall Street these days that this was the perfect storm. It couldn't have been avoided. It was one of those forces of nature. But in fact, this wasn't about a computer model going haywire. It wasn't about Mother Nature skipping a beat. It was about human decisions, inaction, actions taken on Wall Street, regulatory neglect in Washington. There were lots of warnings, widespread reports of predatory and egregious lending practices across this country. As early as 2004, the FBI reported that there was a wave of mortgage fraud that if it was unchecked, it would dwarf the losses we experienced in the savings and loan crisis. There were reckless practices on Wall Street happening beneath the very nose of our regulators. And of course, there was a small matter of the mortgage debt in this country doubling within 7 years and the creation of $13 trillion of mortgage securities that ended up being deceptive and worthless in the end in so many ways. What we saw in our report, that modest 600-page report, were dramatic failures in regulation. The Federal Reserve under Alan Greenspan had opportunities all through the 2000s to check the reckless lending practices that were happening in this country, and they sat on their hands. The Securities and Exchange Commission during the Bush era, time and time again, had the ability to crack down on the big investment banks like Goldman Sachs and Merrill Lynch, and they did not act. The Federal Reserve Board of New York had the ability to rein in the excesses of Citigroup, and they did not do it. So we saw the failure of regulation coupled with the recklessness and the speculation and the gambling that took hold on Wall Street. Now, we've paid a terrible price for all this. You know, a lot of people focus on TARP, the big government bailout program, the $700 billion bailout program. But let me just say something. That was the tip of the iceberg. Before this crisis was fully in bloom, in late 2008, early 2009, the federal government had put together 24 different programs with trillions of dollars to bail out the major financial institutions in this country. And what's really striking is the disconnect between the price paid by all of us and the rewards gotten by the CEOs on Wall Street. I mean, take a look, for example, at Martin Sullivan. He headed AIG. He drove it over the cliff to the point where we had to bail it out with $180 billion. He made $107 million in 3 years. Robert Rubin was at Citigroup and made more than $100 million as that company went over the cliff, and the American taxpayers put up $45 billion in TARP money and $300 billion in guarantees. Stanley O'Neill left Merrill Lynch with a $161 million severance package for essentially running that company into the ground. And of course, the recklessness was also accompanied by ethical breaches across the board. Mortgage brokers who steered borrowers into loans they never should have had. Internal emails in companies like at Countrywide that warned against the very practices that brought that company down. And time again, investors being deceived about the real nature of the mortgages that were being packaged and sold across this world. So after all this, what are we seeing? Have we seen a national commitment to remake our financial system to make it safer? Have we seen a national commitment to remake our economy, to move away from an economy where it's all about money making money instead of money being used to create good jobs for our people? No. We've seen an emboldened Wall Street that is counterattacking and trying to finish the job they started before the crisis. Since the Wall Street reforms were passed in 2010, we've seen a fierce rearguard action by financial and corporate interests to try to roll back the clock and to try to stop any reforms. In the first quarter of last year, for example, Wall Street spent $52 million lobbying to stop financial regulation. They've tried to strip out money from the Securities and Exchange Commission and other regulators that are trying to protect the public. They've tried to block all the nominees in the Senate to major financial regulatory positions. But here's what's most disturbing. You would have thought coming out of this crisis, we would have rethought the nature of the economy in this country. We would have recommitted ourselves to the model that worked so well in the 50s, 60s, and 70s, where we took the view if we had a broad middle class and if we helped working people succeed, all of us would be richer. But instead, we're seeing something quite different. We have the lowest ratio of wages to the gross domestic product in this country since the Depression. Since the recovery, in quotes, officially started in May of 2009, 92% of the income growth in this country has gone to corporate profits and none to wages. The longest length of unemployment since records began being kept. And stunningly, in the midst of all that, what do we see? The median pay of CEOs went up 28% last year. We were worried about banks that were too big to fail. Now we got fewer banks that are even bigger. The 10 largest banks in this country now control 77% of the banking assets. They made $62 billion last year. And Wall Street compensation hit a record of $135 billion 2010, while working men and women were struggling across this country. What's most troubling is there appears to be no correlation between who drove this crisis and who's paying the price. There seems to be almost no consequences for the people who are primarily responsible for driving our economy in a ditch. It's as if there was an earthquake where the gleaming skyscrapers at the epicenter were left intact and there was rubble all across this country. And men and women across this nation are now wondering who's going to be there to help dig them out. There's a fierce effort to rewrite the history. Alan Greenspan, who is at the center of this, is now trying to deflect blame away from Wall Street. But what is even more disturbing is they don't want to change the rules. They don't want to change the system that brought us to where we are today. What they want to do is change the subject. And so what you are seeing is you are now seeing a concerted campaign across this country by financial and corporate interests to blame working men and women, police officers, firefighters, teachers, other working people for bringing this country to its economic knees. Not satisfied with having ripped away $9 trillion in wealth from American households, we are now seeing a concerted effort to strip away retirement security from the only Americans who still have it. And we are seeing a concerted effort to try to drown out the voices of working men and women in the political process. And who are they attacking? Here in California, teachers whose average salary is $50,000. Whose average pension is $2,400 from CalSTRS. CalPERS employees, public servants, people like you, whose average pension from CalPERS, I might add, is a whopping $2,300 a month. Who's paying the price for this? Not the corporate CEOs, but college students in California. People have seen 132% increases in their tuition since 2007. Look, the truth is, it was recklessness on Wall Street and giveaways to the wealthy that brought us to this point. You know, there's a lot of complaints about your pensions from people on the right. They don't mention that we have cut taxes in this state by $15 billion a year since 1996, mostly for the wealthy and mostly for corporations, that's crippled our ability to provide basic services. So all across the country, make no mistake about it, there is an effort to deflect attention and to blame our troubles on those people who are suffering most because of the meltdown on Wall Street. That's why in Alabama, and Arizona, in Indiana, and Ohio, and Wisconsin, you see this cynical, unprecedented attack. And now here in California, continued attacks on pensions, and now the paycheck deception measure moving to the ballot. So what do we need to do? We need to do what you are so good at doing, and that is standing up and fighting for what's right. Time and time again, the firefighters have been the leaders in this state for what's right. Not what's left, not what's right politically, but what's right for our state, what's right for our families, what's right for our communities, and what's right for our economy. And so let me just say a couple things here about what I think we need to do collectively to get California and America back on the right path. First of all, picking up on my position as head of that commission, all of us need to demand that if there was wrongdoing and crimes committed during the financial crisis, the people ought to pay the price. The question I get asked most often is, why has no one gone to jail for the terrific damage that was done to this country? You know, look, we don't want hangman justice. We don't want revenge. But if wrongs were committed, we want them righted. And we want a justice system for everyone. Time and time again, you see these big corporations who settle for pennies on the dollar, having made billions of dollars on the kind of trades I was talking about on that screen. Well, they get to settle for pennies on the dollar, no admission of wrongdoing. I guarantee you this, if someone robbed from a 7-Eleven and took $1,000 and they could settle for $25 and no admission of wrongdoing, they'd be back at it the next day. We don't need revenge, but we want deterrence and we want justice in this country. Secondly, we got to enforce the reforms of our financial system so we have a financial system that works for America and creates jobs, and it's not just a place of speculation and risk that harms us all. Third, we got to help all those working men and women who did the right thing, whose homes are now underwater, 30% of households in California, and I suspect many of you, whose homes have so dropped in value. The fact is we got to help those folks stay in their homes. Next, we got to remake this economy. We got to move away from an economy, as I said, that's about money making money, and move to an economy where we invest in education, infrastructure, and quality public services, and build the foundation of our country once again. You know, in 1980, the financial sector was responsible for about 15% of corporate profits in this country. By the 2000s, it was over 30%. This has become an economy driven by financial interests to the detriment of the greater good. And finally, we need to take a stand against this aggressive, pernicious assault on working men and women that's taking place across this country. Now, as I said, you've always been the leaders. And in many respects, California's always been the bellwether. Your brethren and your sisters in Wisconsin and Ohio and other states have shown tremendous courage, and they've given heart to people. They started the movement that's now blossoming across this country to demand a level of economic opportunity of equality in this country. And here in California, the eyes of the nation will be on the voters of this state when this paycheck deception measure goes to the ballot. And I know, once again, with the firefighters in the lead, we can send it down to defeat. Look, in 1998, you all know that Pete Wilson tried this. He tried mightily. He marshaled all the corporate and financial interest, and because of your efforts, it went down to defeat. In 2005, Arnold Schwarzenegger with Prop 75 went at it again. But again, with the firefighters in the lead, you sent it down to defeat. And I know that because it's right for our state, it's right for our communities, it's right for our families, that once again in 2012, when that measure goes to the ballot, the firefighters will be on the front phalanx and send it down to defeat. And when you do that, just like your brethren have been fighting across the country, we can set the foundation for the right kind of America. The right kind of America where we have a financial system where, for all of us, and an economy where everyone has the chance to succeed. I just want to close by saying this. I will always be eternally grateful for all you've done throughout my life to work with me to do what we thought was right for our state. And I pledge to you, as you go into this fight, as one citizen, a private citizen, I'll be with you. I'll do whatever I can. We will stand up. We will fight. We will win. Thank you very much for having me here today. Thank you. Thank you.